June 20th, 1999 was a day filled with mixed feelings of joy and uncertainty. After my last day of being stationed with the 101st Airborne Division in Fort Campbell, Kentucky, I was on a flight back home wondering what I would be doing next. What civilian job would be a right fit for someone with shooting expertise of an M16 rifle from 300 meters away who could additionally rappel out of a helicopter and was the best Hummer mechanic in our unit. I couldn't forget mentioning in my resume that I could do 82 push-ups non-stop in 2 minutes. Can you imagine the look of an employer's face when I would list my qualifications? Knowing the unique nature of my resume, I decided to get a job in a field I was very familiar with. I took a job at Bally Total Fitness in Culver City, California, while going to school part-time. It was a good job, one that suited my physical skills, but it was not something that I could do for the rest of my life. While working at the gym, I had a chance to meet many different people from all walks of life. I was always curious to know why some of the people that I met were making over $300,000 a year, while the others were only making $60,000 a year. Both income groups consist of quality people who were willing to work hard, so why was there such a big gap in their income? Initially, I assumed that the high-income earners all had 4 or 8-year degrees, but I found that wasn't the case. In both categories, I met people who had degrees and others who didn't. The next thing I started asking while selling gym memberships was how my customers liked their work and how it impacted their personal lives. I grew up in an environment where the stereotype about rich people was that they didn't have a personal life. All they cared about was money, and the rest of their lives didn't really matter. But the more time I spent asking questions, the more I realized that in all income brackets, there were people who had good personal lives and bad personal lives. Some of the top income earners were involved in industries that required them to work 7 days a week, which seriously affected their personal lives. I also noticed those who were only making $60,000 had a hard time supporting their families financially, which created a lot of financial hardships and in many cases led to a divorce. These answers only created more questions for me. I was inspired to search for an industry that provided the opportunity to earn a great living while having a great personal life. I wanted to be able to provide my future family while simultaneously getting to spend quality time with them. After all, without a great family life, what's the point of making a lot of money? This was a severely challenging time in my own life financially and emotionally. My father's health was declining, which caused him to have several heart attacks. During the same time, I ended up accumulating roughly $49,000 of credit card debt on 26 different credit cards. It was very annoying dealing with the creditors who were calling me left and right on how to collect my debt. I thought about money all day long. I mentioned the stereotype that all rich people think about money. This is how I felt, but the difference was I had no money. Even so, money was all I thought about. I read a Chinese proverb once that said a single conversation across the table with a wise man is worth a month's study of books. I attended a seminar in 2000 where I met a gentleman named Bob who challenged my way of thinking in a way that no person had ever done before. Bob was a speaker at a seminar, and after he delivered a great message, I asked him for his card so we could stay in contact together. A few days later, I went to lunch with him where I got a chance to know him better. I asked him many questions about money, but he kept changing the subject. Finally, he stopped me and asked, "Son, do you know why all you think about is money?" I replied, "No, I don't." He said, "What would be the first thing you'd be thinking about if I were to cover your nose and your mouth?" I had no idea where he was going with this, but I answered, obviously, I'd be thinking about air. He asked me, "Why would you be thinking about air?" I said, "Because I don't have any of it." He followed up and said, "Do you know why all you think about is money?" He followed this with what struck me as a very weird question, asking, "Do you ever catch yourself walking around bragging about how much air you have?" At this point, obviously, I started questioning whether it was coffee he was drinking or hard liquor. What kind of a question was that? Simply curious to know where he was going with this, I replied, "No, that would be very stupid to brag about how much air I have." He responded, "It would be stupid because you have plenty of air to breathe. The last thing you're thinking about is the amount of oxygen you have at your disposal, right?" Yes, that's exactly how money works. "Do you know why all you think about is money?" I said, "Why?" He said, "Because you have none of it." When you have plenty of money, the last thing you think about is money. Your mind becomes free to start thinking about the things that actually really matter in life. The key is to get the money issue solved as quickly as possible so you can start having the freedom to do the things you were really put on this planet to do. I was blown away by his answer. I wasn't happy with the answer, but he was absolutely right. I had many great ideas on what I wanted to do in my life, but when your mind is consumed by financial problems, you minimize the time and energy you have to think about the bigger picture. This exchange challenged my way of thinking and inspired a sense of urgency to learn about how money works. I was anxious to get that issue resolved as quickly as possible so that I could have the freedom to do the things I really wanted to do. I'm a firm believer that every one of us wants that as well. for ourselves as well as for our families. We all want to put our mark on this universe before we leave it. So before I get into the topic of what's the next perfect storm, it's very important for me to clarify why I decided to write this book. I've had the privilege of meeting hundreds of people over the last 10 years, and I'm always amazed at how many people with unique God-given abilities never get a chance to live their life to its full potential. Oftentimes, the reason for that is because they spend their entire lives concerned about solving financial problems, which keeps them distracted from why they're here on earth. The purpose of this book is to show you that there's an industry that is currently experiencing a perfect storm that could give you the opportunity to become financially independent while simultaneously having a great personal life. In reading this book, your mindset will be challenged numerous times, and many of the conditions that you've been brought up accepting may be questioned. In order for an industry to experience a perfect storm, there needs to be a combination of several different conditions that generates a certain level of intensity, momentum, and power in that industry. Individuals cannot create that kind of power on their own. But if they take advantage of it when the conditions are just right, they have the potential to be phenomenally successful. It's a rarity to see a perfect storm occur, but ultra successful businessmen and businesswomen who you read about have generally been involved in one. The perfect storm makes the average person seem like they belong in the movie The Avengers. The key is to time the storm accurately while having the courage to get involved in the industry and put your energy and dedication into it. Knowing about the next perfect storm means absolutely nothing if you take no action. You can be knowledgeable about different conditions that make up the perfect storm, but if you don't act, you won't reap the benefits of it. On a Saturday afternoon in 2001, I was invited to go to Newport Beach to meet a few people. Little did I know that this was a day I would never forget for the rest of my life. We don't have too many days like this, but this was definitely one of them. The meeting was held on a yacht at Balboa Bay Club, where I knew in advance that some of the people I was going to meet were very, very well off. When we got there, we were greeted by cocktail waitresses who offered us a choice of red or white wine and hors d'oeuvres. This was certainly new to me, considering the chow hall in the Army never gave us this kind of service. After a few minutes of meeting and greeting others, I was introduced to a gentleman named Robert who owned the yacht and many others next to it. At this point, I was starting to feel a little more comfortable with the crowd and figured that this could be my opportunity to ask Robert questions about business and different industries. He had enough charisma to fill an entire football stadium with a sense of humor that made me like him even more. He was somewhat sarcastic, but the kind of sarcasm that wasn't necessarily hateful. He was a man with so many life experiences who knew how to captivate the entire audience with his style of storytelling. I only got a chance to ask one central question as it led to a long session of him speaking while I just listened. It was like a scene out of a movie when someone with a lot of influence speaks. A crowd quickly gathered around us to hear what Robert had to say. Here's what I ask. Is there an industry out there that gives you the opportunity to make as much money as you'd like while still having a life? He gave me a grin and with no hesitation asked me, Patrick, what would you say are the busiest days of the week? And I remember exactly what I told him. I said, it's either the beginning of the week or the end of the week. And he said, okay, perfect. Now, could you tell me what's the one place most people would like to be on Friday morning? And I told him, I said, well, I'm sure people wouldn't mind being at home relaxing with families. And he said, well, that may be the majority, but the wealthy people would like to be at the country club golfing on Friday morning. I said, well, that's good for them. Being born in Iran, the last thing we think about doing on a Friday morning is going golfing. Matter of fact, we kind of prefer to stay away from bunkers as much as possible. But I understood what he was asking. I said, okay, that's fine. But what's your point of this question? What do you mean by this? He said, the majority of the people that golf on Friday morning are in the insurance and the financial industry. And I never understood what he meant by that. So what do you mean the majority of people that golf Friday morning are in the insurance financial industry? He said, well, they get involved in a business for 5, 10, 15, 20 years. And eventually 5, 10, 15, 20 years later, every time somebody pays the premium or every time somebody pays the insurance or puts more money into their annuity or whatever it may be, they keep getting paid over and over and over again. And eventually they have a life that pays them $10, $20, $30, $40, $50,000, and even some people a 6-figure a month income that allows them to do whatever they want to do, especially golf. And I said, well, I never thought about it like that before, but why financial industry? And then he went into this whole rant about sports. He's a big sports guy, and I'm a big sports guy. So he says, Patrick, can you tell me what are the richest sports in America? And I grew up playing baseball, basketball. I'm 6'5", 240. So I said, baseball and basketball. And he said, Patrick, baseball and basketball are the poor man's sport. I said, baseball and basketball is a poor man's sport? He said, absolutely. I said, why is that? He said, because you can always tell which television programming is tailored to rich people and poor people based on what kind of companies advertise during commercials. I said, okay, and what kind of companies advertise in baseball and basketball games? He said, beer, Coca-Cola, Nike, and McDonald's. He says, you know who buys those four things? I said, who? He said, poor people. Well, I'm sitting there a little bit frustrated myself saying, wait a minute, that's exactly what I buy. And he says, of course, they know you buy those things. That's because you're their market. And I said, well, since you know everything, what are the richest sports in America? He said, golf and tennis. And he says, do you know what kind of companies advertise in golf and tennis tournaments? I said, what kind of company? And then he went into it. Allianz, Hartford, Allstate, Prudential, Chase, Pacific Life, and the list is long. He said the reason why those kind of companies advertise during golf and tennis games is because the wealthy and the affluent understand how insurance and money works. The poor don't. He says before it's too late, get involved in the financial industry and learn exactly about how money works. And that's exactly what I did. This was one of those moments that I'll never forget in my life. Matter of fact, you can call it this an epiphany type of a moment that influenced me to consider career in financial services industry. The only concern for me was whether I could be successful or not, because my background has nothing to do with the financial industry. And no matter how much I try to convince myself to discredit all the reasons I'd heard, I knew that my family was counting on me to deliver, especially my mom and dad coming here from Iran with a Christian family to just give their son and their daughter an opportunity. I want to make them proud. I saw this as potentially being that opportunity for me to give that life to them that they always wanted to have. But being a rookie in the financial services industry, I decided to start applying to some of the largest financial firms in America. On a drive back from watching Ronnie Coleman win the 2001 Olympia contest in Las Vegas, I got a call from Mr. Kirby offering me a position with Morgan Stanley Dean Witter as a financial advisor. I was thrilled about this opportunity. Monday, September 10th, 2001 was my first day of work at Morgan Stanley Dean Witter. And I was going through my onboarding process, which involved a 3-week trip to Morgan Stanley headquarters at the World Trade Center. However, something dramatic happened the next day, and that's called 9/11. That was my second day of work. It's a day I will never, ever forget, because when I go to work and we're having our managers meeting at 5:30 and the broker's talking for about an hour, and then one of the main brokers from the corner screams out and says, turn on the monitor, and everybody turns on the monitor thinking the market opened up and it's either good or bad. And we turn on the monitor and we see the first plane that hit the World Trade Center. And then as we're going through the whole thing live, we watch the second plane hit the World Trade Center, and that's our headquarters at the time of Morgan Stanley Dean Witter, with roughly 3,700 employees working. Then I'm supposed to go there for 3 weeks for training, and we saw the entire building collapse. And that's how I got involved in the financial industry. I'll never forget that. He sat us down the following day, because everybody went home that day, and the next day the market was terrible. Nobody wanted to buy stocks. Nobody wanted to do anything with investments for a long time because they just didn't trust it. They had no idea what was going on. There was a lot of challenges going in America. Mr. Kirby sat us down and he says, listen, to the new brokers, he says, look, if you guys were to quit the industry today, it would absolutely make sense. If you were to leave it, it would absolutely make sense. But about a decade from now, there's some special that's going to happen to this industry that I would highly recommend you guys sticking around, because if you do, you could definitely take advantage of this opportunity if you do stick around. And we all sat there and were waiting to see what he's going to be talking about. And he explained to us what he meant by that. And then from that moment, we all had to make a decision to either stay in the industry and leave. And that's how I'm going to open up and tell you about the Next Perfect Storm in the book, starting with condition 1 of the Next Perfect Storm, the baby boomer phenomenon. Ray Kroc once said, the 2 most important requirements for major success are, first, being in the right place at the right time, and second, doing something about it. You know, we've heard this sentiment before. We've heard this quote before by Ray Kroc. But, you know, when you really think about it, I mean, I think we would all agree that success of a business has a lot to do with timing. When you think about history, timing has been a major cause of many Americans becoming wealthy. It doesn't matter how far back we go or how recent we go. If you think about the 90s, you would think about technology and what it did in Silicon Valley and all of these folks becoming wealthy because they were at the right place at the right time. If you think about the 2000s, you would think about real estate. The real estate boom was just unbelievable. And I've finally come to a conclusion that human nature has a tendency to want to wait and see if others experience success before diving in themselves. But by then, the opportunity is typically too late. You know, most people didn't get involved in the stock market in the early 90s. Most people got involved in the stock market in the late 90s, 99, which was already too late. Most people didn't get involved in real estate in early 2000. Most people got involved in 2006, 2007, which is already too late. We have a tendency of doing this. Normally when somebody comes up to us and says, hey, I have a great opportunity, I want to share this with you. This is what's going on with this business. We'll typically say things like, why don't you go out there and make money first and then call me? But by the time they make money, it's too late. And they're too busy now to call you because they've already took advantage of the opportunity. So what I'm going to talk about in the next few minutes here with this book, The 5 Conditions, this could really be one of those moments for you if you do something about it. It's been said that if you want to time the market and make a fortune, find out what baby boomers need next and do something about it at the early stages of the boom, and you have a shot at becoming wealthy. So let's talk about the baby boomer generation. Who are the baby boomers? Well, if we look at the baby boomers, you'll see an interesting trend. It's estimated roughly 76 million babies were born in America from 1946 to 1964. That may not compare to the numbers in China or India, but there's never been a time where more babies were born in America than this 18-year period. But the question you may ask is, why were they born after 1946? So the war ends roughly in 1945, which allowed many soldiers to return home to their families. And what would you say was the first thing on a soldier's mind when they came back and they hadn't seen their wife or their girlfriend for the longest time? Right? You probably said making babies. That's exactly what was on their mind. America was on fire making babies during that 18-year period. I want you to imagine that today's 1946. Just think about this for a moment. You and I are friends. We're sitting down talking in today's 1946. And we know, you and I know, that in the next 18 years, 76 million newborn babies are going to be born. If you and I knew in the next 18 years, 76 million newborn babies are going to be born, what are some products you and I would come out with that newborn babies need? Think about that. You probably said baby food or toys or baby shampoo. You probably said some of those things. Well, think about it. When you think about those products, baby food, toys, or baby shampoo, what companies do we think about? You ever heard of Gerber? You ever heard of Mattel? You ever heard of Johnson & Johnson? When do you think these companies really started growing exponentially? As a matter of fact, if you think about it, Mattel was founded in 1945 by Harold Matson and Elliot Handler the year World War II came to an end. Does this tell you something about timing? How about Barbie? When you think about Barbie, I remember my sister used to play with Barbies in Iran, and Barbie made it out to Iran. Do you know when Barbie was born? Barbie was born March 9th, 1959. And Barbie was founded, ended up being a toy sold worldwide that even made it out to the Middle East. And I don't want to discard the strategic advertising and marketing that Mattel had in place, but they absolutely capitalized on timing, knowing these 76 million baby boomers were at the age that they're going to want to play with toys. Now let's continue this and see what happens in the 50s. So think about in the 50s and the early 60s. Boomers started turning 5 to 7 years old. What do kids start attending at that age? We started attending schools. But there was a challenge with the schools. We didn't have enough schools to facilitate for 76 million kids. So what do we need to build? More schools. Which industry do you think boomed next? If you said construction, you're absolutely correct. We went to the U.S. Department of Education and we got a study from them that said, how old are America's public schools? And here's some of the numbers we got. The U.S. Department of Education did a study in January of 1999 titled, How Old Are America's Public Schools? And here's how the numbers broke down. You ready? So in the 50s and 60s, 45% of all public schools in America were built between 1950 and 1969. Once again, 45% of all public schools were built between 1950 and 1969. And this is a quote direct from the National Center for Education Statistics. The increase in the construction of schools between 1950 and 1969 corresponds to the years during which the baby boomer generation was going to school. Why? Because we needed to build more schools, so construction companies started growing, and it was one of the best times to be involved in construction. Now let's go into the 60s and 70s. So kids at this age are starting to turn 16 years old. And what do you think is the first thing on a 16-year-old mind? You probably said cars. And if you said cars, what car would you say was the top best-selling car in the 60s? If you said Mustang, you're right. The 1964 Mustang came out and it became one of the top selling cars with boomers because they wanted a sports car. They didn't want a station wagon. They wanted to drive a sports car, and the car industry started booming. Now, if we go into the 70s and 80s, boomers at this age are turning 30 years old, and they're typically married with kids, and wife looks at the husband and says, honey, I'm sick and tired of renting. Let's buy a house. And what do you think blew up during that time? And which industry do you think did very well during that time? Real estate. Real estate went to a whole different level during that time because boomers wanted to buy a house. And then you go into late 80s and 90s, this was a time where everybody was thinking about accumulating wealth. Honey, we need to start putting some investments aside. We need to start having some of our money, increasing our net worth. We need to do something about our finances. So that's when mutual funds started doing very well in the 80s and the 90s. And then now, from 2010 to 2030, here's what we're looking at. Baby boomers today are roughly the ages of 51 to 69 years old. What do you think is on boomers' minds? Think about that. They're thinking about retirement. 1 in 4 Americans today is a baby boomer. This is the largest population in U.S. history. A baby boomer turns 50 every 18 seconds and 60 every 7 seconds. They're no longer thinking about the next penny stock or the next hot mutual fund. They're 66-year-olds and 48-year-olds. They're thinking about retirement. Whether they're 66 years old or 51 years old, they're thinking about retirement. For decades, retirement meant giving 30 years of your life to a company and trade for a pension plan that takes care of you for the rest of your life. Today, those days are slowly but surely drifting away. According to the IRS, the number of pension plans available has dropped from 114,000 in 1985 to only 38,000 in 2010. Think about this. There used to be time you and I worked for 30 years and we got a pension plan. So we don't have a problem working for a company for 30 years for 9 to 5 as long as they took care of us on the back end with 30 years. Those days are gone. And which direction do you think these numbers are headed towards by 2030 and 2050? Do you think we're going to have more pension plan or fewer pension plans? Matter of fact, while you're listening to this, ask yourself, do you get a pension plan at your company? And I'm not talking about 401k. I'm talking about a pension plan at your company. If you said yes, you probably work for the city. You probably work for the government. If you said no, you probably work for a private corporation and no longer offer pension plans. You know, the 401k plan, let's talk about that. It was introduced in 1978 to supplement your income from your pension plan during retirement. But for many, the plan didn't produce the results people were expecting to get. Time magazine did an article on October 9, 2009 titled, Why It's Time to Retire to 401k, in which they show the performance of the plan from 1998 to 2008. According to the study, the average 401k account had $47,000 in 1998. Imagine if it's 1998 and your 401k reads $47,000. Where would you expect that to be 10 years later in 2008? Now, most people would probably be happy if the account doubled or even if it gave 6% return. But the real account balance by 2008, 10 years later, was a whopping $45,519. That means in 10 years, the average 401k balance lost $1,485. How many baby boomers do you think can afford another decade like this one? What most of them are looking for is an investment vehicle that will give them the highest possible return with the lowest amount of risk. An annuity becomes a great fit for many of these baby boomers. Annuities got a black eye from the 80s throughout the 2000s because their returns couldn't compare to the returns of the stock market or real estate market. But after that took place, at the end of the tech boom, 9/11, and the real estate boom, more boomers are becoming interested in annuities. The simplest explanation of annuities is an investment vehicle issued by an insurance company primarily to provide income during retirement. They come with a number of different options that can be tailored to fit an investor's cash flow or future income needs. This is why you're starting to see more and more baby boomers requesting information about annuities. Although annuities may not be for everyone, they sure fit like a perfect glove for many baby boomers. The internet has made it very easy for boomers to have access to information. They are more educated about money than ever before, and annuities are one of the vehicles in particular they are interested in. The desire for boomers to look at annuities as an option will be going on for the next decade or two, and therein lies a phenomenal opportunity. Annuities have a longer history than most investment vehicles. They were initially called annua, a term which was used by the Roman Empire to recognize the royal soldiers. They are used in many different places, but they're not always labeled as annuities. For instance, most pension plans that are offered to employees who give 20 or 30 years of their lives to the companies are in fact annuities. Many teachers, firefighters, police officers, military personnel, and government employees have their retirement paid to them in the form of an annuity. The state lotto system uses an annuity to make payments over the course of 20 years to lottery winners. The legendary baseball player Babe Ruth survived the infamous stock crash that took place in 1929 thanks to annuities. Advised by his mentor and sports cartoonist Christy Walsh, Ruth put his money into annuities before the crash. Due to that decision, Babe Ruth was financially secure during the Great Depression, while many celebrities had to start all over again. Last but not least, Benjamin Franklin was an early supporter of the concept of annuities. At his death in 1790, he left in his will 2 annuities to the cities of Philadelphia and Boston. The Boston annuity lasted over 200 years until the city officials voted to end the annuity in 1993 and use the lump sum that remained. I can go on and on with stories, but the point is that boomers have a tremendous need when it comes to making better decisions during their retirement years. This in turn has caused a tremendous demand in the life insurance and financial industry. I want you to keep in mind that I've been in this industry now over 14 years, having held licenses such as Series 7, 66, 31, 26, and Life and Health. I've had the opportunity to serve my clients in many different ways. After being involved in one way or another in serving tens of thousands of families, I have come to the conclusion that no single product is perfect for everyone. I've sold both term and permanent policies, stocks and bonds, mutual funds and unit investment trusts, variable annuities as well as index annuities, but it all comes down to the investor's time horizon and risk tolerance. The reason why I feel very comfortable recommending annuities for a portion of the baby boomers' asset is because I've personally witnessed many ugly scenarios involving investing solely in equities. For every 10 story of a client quadrupling his money in equities in 10 years, I've heard hundreds in which a client lost half of their account. Try explaining to Mr. Jones, who is 63 years old, why his account went from $550,000 to $375,000, or even worse, try explaining it to his wife. These are real-life situations that I've personally witnessed. I remember working at Morgan Stanley and hearing horror stories of some brokers in the industry who put 100% of their clients' assets in equities during the boom, which led to horrendous losses. There were some days where the phone seemed to weigh 400 pounds because very few brokers were brave enough to pick up those calls and explain why that happened to them. See, investing 100% of your portfolio in equities requires a tolerance for losing money. I do think there's a place for equities, but such investments need to be handled in a proper way. There's a formula that's talked about in the financial industry for this. Subtract your age from 100. Then invest that percentage of your money in equities. For example, if you're 60 years old, you have no more than 40% of your money invested in equities. 100 minus 60 is 40. This is why you're starting to see many of the recognized banks and brokerage houses recommending annuities that are suitable to the clients. If done right, you don't have to worry about the potential of a client losing 30% of his or her account value in 1 year. This is where you hear about the power of zero. How many of the investors who lost during the tough years wish they would have just had a return of 0%? Many would, and that's where the annuity protects the investor in the majority of cases. Let's talk about the great wealth transfer that's taking place currently right now. Anytime the word trillion is used, it's something to pay attention to. You see, the greatest wealth transfer in the history of America is taking place as we speak. The fact that 76 million baby boomers are getting ready to retire or starting to retire has influenced many universities to do research on what that number really means. This is what Boston College said about the great wealth transfer. Despite the economic downturn to follow the equity markets, the nationally noted projection that a wealth transfer of at least $41 trillion with as high as $136 trillion will take place in the United States by the year 2052 remains valid. Those numbers were 41 to $136 trillion, not billion dollars. This is wealth that's going to be transferred, whether you get involved in the industry or not. What that means is that the demand for agents and advisors to get involved in the financial industry is increasing. See, in order for this wealth transfer to take place, there needs to be a middleman, and that middleman is a licensed professional that can do that. We're talking $41 trillion that will be transferred to equities, cash, or annuities, but the point is that it creates a perfect time to get involved in the industry. Earlier, I told you about my branch manager, Mr. Kirby, who sat us down at Morgan Stanley Dean Witter a day after 9/11, told us why we ought to stay in this industry for 10 years, he was telling us that in 2011, these baby boomers, 76 million of them, are going to start turning 65 years old. And that's the year that all these advisors have been looking forward to, because the demand for what we do as professionals will be at an all-time high. So getting involved in the boom now will give you the opportunity to serve this family while earning a great income, which in turn will allow you to spend more time with the people that you love the most. That's why the baby boomer phenomenon is one of the biggest components of the next perfect storm. One of the most common questions I get asked by entrepreneurs is, what's the next boom? So many people try to time the market, but because it's so unpredictable, this rarely happens successfully. Both the tech boom and the real estate boom in the 90s were very unpredictable. A few may have claimed they predicted it, but the majority missed both of the booms due to a lack of timing. If you missed the last two booms because you didn't anticipate them, it isn't your fault. But if you miss this next boom, knowing all the information that we're giving you, then it is your fault. See, in order for a sector within an industry to experience a massive, massive boom, all the other sectors within that industry need to stay flat for roughly 10 years. Let's look at how that relates to the financial industry. Here are three simple questions to ask yourself. Question number one, does America trust the banking industry today? Think about that. Could you or I have predicted in the early 2000s that by the end of the decade, WAMU, Freddie Mac, Fannie Mae, Merrill Lynch, Lehman Brothers, Wachovia, IndyMac, Bear Stearns, New Century, and Countrywide would either be acquired or go bankrupt? Seeing this number of banks go out of business made it very clear to many of us that it may not be a good time to put our trust in banks. Both as a career choice and as an investment opportunity, the banking industry has lost a ton of credibility. There was once a time when investing in a CD may have sounded like a wise investment to help supplement your retirement income, but the numbers have changed. CD interest rates had a steady decline from a high of 16% in 1981 to a low of 0.28% in May of 2010. Here's what that means when it comes down to looking for a good return. That interest rate, all it means is how long does it take for your money to double? For example, if you were to invest $100,000 in a CD in 1981, by the middle of 1985, your money would have doubled if it kept getting 16%, because your money would have taken 4 years roughly to double. However, if you were to do the same thing in May of 2010, when the average return on a CD was 0.28%, your $100,000 would have doubled by early 2,267. Yes, you heard that correctly, 2267. It would have taken roughly 260-some years for your money to double. Why? Because you're only getting 0.28%. I'm not sure about you, but I don't think too many people have that kind of patience. This is one of the reasons why the banking industry has lost a significant portion of consumer trust. Second question, does America trust the stock market today? Think about that. There was once a time in the 90s when it was cool to be a stockbroker. Thousands of people were taking their exam to get their Series 7 license, especially after the S&P 500 posted 5 consecutive years with returns of 20% plus returns. You couldn't go a day without reading an article in the paper or business magazine about someone who made millions trading stocks. Even Hollywood didn't miss the boom. Do you remember the movie Wall Street, starring Charlie Sheen and Michael Douglas? You remember Gordon Gekko or Bud Fox? How about Boiler Room, which was where Vin Diesel first made a name for himself as a leading man? I don't know if you remember that. This was the era of stockbrokers. Hollywood made it cool to be a broker in the 90s, but we're living in different times. Most stockbrokers and investors no longer want to go to sleep at night as they're too worried about how the market is going to perform in the morning. Can you imagine going to sleep at night every single morning, being afraid to turn on the TV in the morning at 6:30, seeing how the market opened up? Think about that life. To the younger generation can potentially handle that risk of losing everything they have and starting all over again, but that's not the case with boomers, many of whom already took a big hit in 2008 and are not looking to lose another penny of their retirement account. Unless you're Bradley Cooper in the movie Limitless and you have access to the pill NZT, which allows you to time the market perfectly, I suggest you look elsewhere for a career. Question number 3. Does America trust the real estate market today? See, there was a period from 2002 to 2007 when it seemed like everyone was involved in the real estate industry. Whoever you spoke to, what do you do for a living? I'm a real estate investor. I'm a developer. I'm a real estate agent. I'm a title rep. I'm a mortgage. Everybody somehow, someone was connected to it. Everyone was calling themselves an investor. I remember clients asking me why they should purchase an annuity or a mutual fund when instead they could buy a house with $0 down and simply sell the house a year or two later and make a 6-figure profit. That was a tough question to overcome because most people were just in that moment. So imagine trying to convince them that this situation wasn't going to last forever. Talk about a losing battle. It was pretty ugly from '02 to '07 trying to build an insurance agency as we were losing agents to the real estate industry every other day. Nina had become everyone's best friend. If you remember Nina, her name stood for no income, no assets, which meant that someone who earned only $36,000 a year qualified for a $750,000 loan due to the fact that banks weren't verifying the income by requesting a W-2 or 1099. They call this creative financing, which caused a boom in the mortgage lending industry like never before. Earning $250,000 a year income during that time wasn't a surprise to many. In bigger markets in America, such as California, Florida, New York, Connecticut, and a few others, brokers and loan officers were earning multi-seven-figure year income annually. It was an era in which the streets were flooded with 20 and 30-year-olds driving Porsches, Ferraris, Lamborghinis, Bentleys, and practically every other luxury car you can imagine. I remember a quote from Gordon Gekko in the movie Wall Street where he said, "Greed makes the bartender buy 3 houses." That's exactly what was happening during that time. But we all know how this ended. That high level of greed from banks eventually caused a recession that almost led to a depression. At the end, we were reminded that the average return on real estate has always consistently been somewhere on 3 to 5%. But the challenge these 3 industries face is that with all the attention on them, regulation is getting tighter and tighter. This means we are going in a direction where you will no longer see mortgage companies called Westside Mortgages or John's Real Estate Company, seeing instead the major banks handling majority of the loans. That's exactly what's taking place today. Whenever the status quo in an industry shifts, 2 different groups of people always emerge. Those who adapt and those who don't. There are thousands of loan officers, realtors, brokers, and bankers who were great at what they did, but they took a hit due to the economy. Many of them are now focused on modifications, foreclosures, debt settlement, credit repair, precious metals, and short sales. The challenge with this kind of mindset is that these conditions will only exist for a few more years. When the conditions change and these strategies are no longer viable, these individuals will have to figure out another way to make money. Instead of having the luxury of thinking long-term, people in the real estate industry will have to resort to another fad. Rather than seeking a quick fix, most of us are looking for an industry that we can give 20 years of our lives to, all while knowing it will provide us with an opportunity to become financially independent and to build a personal life worth working hard for. But there's one sector in the financial industry that is experiencing a level of growth that it hasn't had since the early 80s, and that sector is the life insurance industry. If you think about the life insurance industry, you don't hear too many companies going out of business. As a matter of fact, I would venture to say that the average person who isn't involved in the industry couldn't name one insurance company that has ever gone out of business. The reason for that is it is a stable industry that will always be around. It's not necessarily a sexy sector of the financial industry, such as real estate or banking, but it's one that allows you to earn the same type of income, if not higher, and build your business while keeping your family life strong. Life insurance also isn't a seasonal product per se, like real estate, stocks, or CDs, because there's always a need for life insurance. Moreover, the fact that American people have lost trust in real estate, banking, and stock market has created a surge of talented individuals looking into the life insurance industry as something they can devote their entire careers to. The great news is that this boom in agents getting involved in the life insurance industry is just getting started. I believe this is a great time to launch a career in this industry, which provides the opportunity of serving the consumer while also building your own agency. This boom will go on for the next 10 years. However, it will not last forever. And so the key to success is launching your own career as soon as possible. You may still be asking why you should choose a career in the life insurance business, but let me explain further why recruiting will be an all-time high in the next decade. Wall Street Journal did an article on March 19 of 2010 titled "A Hot Job for Hard Times, the Life Insurance Agent." The article went on to say the industry is about to experience a level of growth like never before. According to this article, the number of U.S. life insurance agents affiliated with a specific company today is down nearly a third since 1970s to 174,000 licensed agents, according to LIMRA. We're talking about going from over 500,000 licensed agents to only 174,000. I would say that's a significant decline in 40 years. The first thing that comes to mind is why? Well, prior to the 80s, being a life insurance agent was a common profession. But due to some of the following events, the number of licensed agents in the industry started declining. For decades, the big life insurance companies built their agency by focusing on getting their new recruits to pass their life insurance license requirements as soon as possible. But then a few distractions showed up. In the 70s, there were approximately 360 mutual funds with $48 billion in combined assets. So think about that, 360 mutual fund companies, $48 billion in assets in 1970. At the end of 2010, there were now think about this, from 360 mutual funds to now, over 15,000 mutual fund companies in the United States with a combined asset. It used to be $48 billion in 1970, 2010, $13.1 trillion. I'm not sure about you, but I would consider that a boom. Additionally, the introduction of money market funds in a high interest environment of the late 70s boosted industry growth dramatically. The first retail index fund, First Index Investment Trust is what it was called, was formed in 1976 by the Vanguard Group, which was led by John Bogle at the time, who is the 2004, he was recognized the Man of the Year in Time Magazine, world's top 100 most powerful, influential people. It was the fad to be involved in the sale of mutual funds or money market accounts. Some money markets were offering returns in a high of 10% during that time, which was very attractive to baby boomers. Today, that same money market fund barely gives you a return of 0.5%. We're talking about 0.5%, which takes 144 years for your money to double. Money markets are no longer used as investments as much as they used to be back in the days for emergency funds. Baby boomers at that time were concerned with accumulating wealth, and mutual funds sure sounded like a good investment. That caused many insurance companies to shift their focus. Instead of getting their new agents to get their life insurance license, now they were getting their new agents to get their Series 6 and Series 63 license. Then came the 90s, during which the time the tech boom showed up out of nowhere. In response, investors wanted to buy individual stocks instead of mutual funds. The license needed to sell individual stocks is Series 7, which meant that insurance companies had to again change their focus and priorities. Instead of having new agents get their insurance license or their mutual funds license, now they were focusing on getting their Series 7 license. That lasted for about a decade until the real estate boom showed up in 2000s with the introduction of a new program called NEGAM, or negative amortization, or pick a payment, or many other names they gave them. It became very easy for families to qualify for loans with payments they could afford to make for that time being. That boom inspired several insurance companies to get their agents to start putting focus on the real estate industry. Whether they encourage agents to get the real estate license or learn how to sell HELOCs or loans or credit line, companies once again changed their priorities of licensing for new recruits. As a result of all these three distractions, it's no wonder that the industry went from having over 500,000 licensed agents in the 70s to only 174,000 in 2010. But here's the good news. We're right back at square one, returning to the industry that America trusted for decades. That industry is life insurance. Another Chinese proverb, so you can tell I pretty much like the Chinese proverbs here. The best time to plant a tree is 20 years ago. The second best time is now. Why is that so relevant for this part of the book? Is because this is just the beginning. The next 10 to 20 years are going to be some of the greatest recruiting years of the life insurance industry. Let me explain to you why. I remember the news in 2006 showing thousands of people going to the LA Convention Center to take their real estate exams. Thousands were taken because they couldn't fit them in any other place. See, when you see thousands of people getting on board to do anything, it's already too late. The boom has passed you by. See, for the first time in history, the California Department of Insurance has lowered the qualification to get a life insurance license. Typically, traditionally, it's been 70% to get a license. You know what it is today? 60% to get a license today in the state of California. The reason why they're doing this is because there is a lot of demand for agents. It would be a good idea for you to consider building an agency during this boom while we only have 174,000 licensed agents. Before it gets back up to 500,000 or 1 million licensed agents, this is the time to get involved in the industry. Condition number 3, average age of a life insurance agent, 59 years old. According to LIMRA, the average age of a life insurance agent currently is 59 years old. The reason why this is so important is that the majority of the experienced agents at that age are no longer selling and no longer training new agents. They've earned the right to live the lifestyle they've worked so hard to earn, and these individuals are the same ones that you normally see golfing on a daily basis. I'm not trying to judge anybody here for having paid the price of 20, 30 years of dedicated service to the industry and not wanting to spend their time with their grandchildren. It totally makes sense. That's why the industry works. But the average age of a life insurance agent has gone up every single year for the last 2 decades, meaning that the industry isn't attracting a lot of new blood. You don't hear a lot of new students graduating USC, NYU, or Duke saying, I want to become a life insurance agent when I finish school. But why is that? So if you read the book, The Millennial Movement, you realize that the younger generation is after. They're not necessarily looking to make money to drive Ferraris and live in big houses, although there's nothing wrong with that. Just look at how long it took Mark Zuckerberg to buy a big house. It took him quite some time because that's not necessarily what he's attracted to. But he's attracted to doing something that makes history. You see, money is not the central goal of millennial generation. Instead, their goal is to make a difference and do something that's never been done before. Too many insurance companies are not speaking the millennial generation's language. And because of that, the industry doesn't seem attractive enough for them to get involved in. For the longest time, the life insurance industry has had the reputation of being boring. When I say being boring, I was at an event the other day speaking, and I said, life insurance agents are the ones that have kept Brooks Brothers in business. Because all they buy is Brooks Brothers clothes. They dress the same, they look the same, everything is identical. Everything is identical. However, the good news is that millennials are starting to understand how much need there is in the industry. And as a result, they're looking for the right opportunity to run with. If you're a millennial and you're wanting to be part of the solution, America's waiting for you to get involved in the insurance industry and be part of the movement of protecting as many families as possible. George Palaio is a perfect example of someone who wanted to be the hero to his family. He knew that immediately after high school, he was expected to take care of his loved ones. His parents did their best to raise their children in the highest level of respect and values, and at a young age, George started dabbling in different business ventures in order to help support his family. At the age of 19, he was introduced to the life insurance industry while going to school. He decided to get his license on the side and give this industry a shot as a part-timer. Very quickly, he started noticing the potential the business offered, and so he went full-time to build his legacy. He's now in his late 20s, running an agency of a couple hundred agents. He's earning the kind of an income that most executives don't earn after being with a firm for 20 or 30 years. At the same time, he's become an example to others his age that they too can build a respectable business and earn an incredible living if they take themselves and their business seriously. George has been able to travel all over the world as well. One of his dreams was to take his family to Hawaii, and just a few years ago, he took his family members on an all-expense-paid trip to Hawaii for a week. Another one of his dreams was to one day visit his family in Puerto Rico, which he had never had a chance to do before. One of the things he did for his family that was very special is his father enjoys breeding German Shepherds, and he eventually bought him a house and a property with lots of land for them to be able to breed German Shepherds. He's able to do that because of this industry. During this journey, George has developed a strong faith in God. As part of this faith, he sees the insurance business as a vehicle to allow him to empower others and serve his generation with the highest standard possible. See, the millennial generation is much different than the baby boomers. They want the people at the top of the company to be part of the generation so they can understand and relate to them. This isn't to say that they don't respect their elders, but just like in sports, this generation wants to watch up-and-coming heroes instead of the established great ones from the past. We all know Michael Jordan is recognized as the greatest basketball player of all time, but no one wants to watch him play today because he's not at his peak. Everyone wants to watch the next 25-year-old or 30-year-old or 22-year-old play today, whether that's LeBron James, Kevin Durant, or many others that are in the NBA. That same principle is very much present in the life insurance business. Millennials are looking for companies that are ran by young leaders that understand today's world. We're living in an era in which the fastest growing companies are being led by CEOs that are in their 20s and their 30s. I'm not just talking about field leaders or vice presidents, but rather the president and the CEO running the company. Zuckerberg, late 20s. Google CEOs, both in their 30s. Zappos CEO Tony Hsieh, 30s. However, in the financial industry, the leaders running the companies are average in their late 50s to 60s. Even boomers nowadays are seeing millennials' viewpoint. They also want younger leaders who are constantly innovating and staying on top of their trends. I've repeatedly said that we are only decades away from having a president of the United States and America who will be in his late 30s. And these young business leaders are proof that we are moving in that direction. Things are changing faster than ever before, especially regarding marketing. Commercials on TV are no longer as effective as they used to be 20, 30 years ago, but platforms such as Twitter, Facebook, YouTube, and blogs are incredibly successful and accepted communication tools. I'll give you a perfect example. On October 31st, Halloween at 3:16, we launched a video on Facebook. It was called The Life of an Entrepreneur in 90 seconds. And we were not expecting anything to happen with this video. We thought it was a very good video, but we were not expecting it to go viral the way it did. We didn't spend a single penny in advertising, not a single penny boosting it. Within 12 hours, the video got 2 million views. Within a day, the video got 5 million views. 30 days later, the video got 22 million views. And I don't know how many views it's at right now when you watch this video. If you go on Facebook, my fan page, Patrick Bet David, you will see how many views it's at. This video went viral within 30 days. You see, the same cost today of a Super Bowl ad that draws roughly 111 million viewers will cost you $3.5 million for a 30-second commercial. Think about that. This video was a 90-second video. That would have been the equivalent of $10 million to get 111 million people. Today, with social media, you can connect a lot faster if you know how to tell a story on social media. Our firm, I run a firm called PHP Agency. We're the youngest financial marketing organization in America right now, with the average age being 33 years old. We have taken the philosophy of marketing to another level. We understand that the younger market communicates in a complete different way. And our market, rather than going after only the boomers, our market consists of boomers and millennials and Gen X's and Gen Y. That is one of the reasons why the average age of our agent is 33 years old, while the industry is 59 years old. The evolution of digital marketing is an unstoppable reality. And our focus was more to use digital media and social media to connect with millennials, Gen X, and Gen Ys. And the reason why we decided to do that is because we saw the entire industry going only after boomers, going only after professionals, going only after that era, that market. After being with Morgan Stanley, being with it for about a year, and with Transamerica for about 7.5 years, I decided to start a firm called PHP Agency with several leaders. We had about 66 agents in October of 2009, which was probably the worst time to start an insurance agency. And 6 years later, now we have roughly 2,000 agents in 33 states. And the reason why that's taken place is because we decided to market in a completely different way. We leverage social media, we leverage marketing, we leverage YouTube tools, Facebook, Twitter. It didn't matter what it was. We were not going to go do the traditional way that these larger insurance companies have been doing for decades. We wanted to innovate and be slightly little different. And I remember when things started taking place. People started following all our comments. People started watching some of the things we did. One of the things we did was at an annual convention in Las Vegas, we decided to do an absolute shock of a flash mob in front of Planet Hollywood, which you can see on YouTube. It's got 150,000 views. Right in front of Planet Hollywood, we set up a setting where, as if one of our agents was with his girlfriend and another man was going to flirt with his girl. This was all an act. It was all acting that we did in front of Planet Hollywood. And there was about 80 of our agents standing around with regular clothes while hundreds of people are walking by. And all of a sudden, there's a circle. Everyone's thinking of a fight's about to break out. Next thing you know, everyone puts on a PHP shirt, a pink shirt, and they do a flash mob to Gangnam Style in front of Planet Hollywood. This got so much media attention. Another thing we did at one of our conventions is we decided to break a Guinness Book of World Record. I'll never forget this at this event. We are in the Guinness Book of World Record for the most checkers players in one room, where the mayor, the congressman, the city councilman, everybody and their families in the city of Reno wanted to participate. It became a hit. NBC picked it up. We were on ABC. We were all over the place because we wanted to attract an audience that wants to be part of something that's never been done before. We did not want to follow the traditional way of doing things. Our keynote speakers were different. We brought Steve Wozniak, the founder of Apple, and I interviewed him. If you go on YouTube right now and type in Steve Wozniak, you would see how that interview went. It's got roughly 270,000 views as of today. We brought complete different types of speakers that connect with millennials and Gen X's and Gen Y's because we believe that's the future of the industry. And because that's the approach we took, we started getting a lot of interest from people. I remember Matt and Sheena Sapala, a leader who's been in the financial industry for quite some time, him and his wife reached out to us over social media, and we started speaking over social media. And next thing you know, now they're running a office themselves out of Chicago. They have an operations out of Boston. They have an operations out of Wisconsin, Northern California, Southern California, Dallas, and their business absolutely started growing. And Matt was in the military before. He served in the Marines before, and 3 times in Iraq. And Sheena herself being an executive before, college graduate. And they both decided to completely go in a different route in the financial industry. And now they're building themselves $1 million business. And Maybe they never thought this was going to take place, but that happened because the marketing got their attention. Traditional industries are taking a completely different route today. Traditional life insurance companies are taking a different route today, and we chose to take this route, and it's worked very well for us. So as a broker in the industry, digital technology gives you the opportunity to recruit and develop agents that are the future of this industry. You get the opportunity to set an example for them and develop them into leaders, something America is desperately in need of. This becomes a perfect formula for the two organizations to work together. When boomers and millennials realize they both need each other, they could potentially form a winning team. Let me give you an idea what I mean by this. Here's why millennials need boomers. Think about that for a second. Because boomers get a chance to share their life experiences with them. They have a place to go for learning the right values and principles. That's what boomers can offer to millennials. They have someone who can teach them about what it is to be a man or a woman, as we have way too many adults in America today who are still boys and girls. They can learn from boomers the mistakes they've made. They can have a mentor for themselves. But I can also say why boomers need millennials for the following reasons. I think millennials and Gen X and Gen Y can keep boomers young. They can keep them active. They can give them a feeling of a sense of fulfillment for developing leaders. They can learn the current trends on social media and communication. And hey, maybe the millennials and Gen X and Gen Y can also teach the boomers a thing or two about some of the new dance moves. You cannot be doing the same old dance moves. Maybe you need to learn how to nay, or, you need to learn how to dance Gangnam Style or some of these other Cupid, all these the shuffles that we have going on. You need to learn some of those things and learn and have fun with that. See, I think the best combination here happens when millennials realize they need boomers and boomers realize they need millennials. And that's what's happening today in the life insurance industry if done properly. When I think about boomers and millennials working together, I think about Jason Graziani. Jason Graziani grew up in Southern California, either in the San Fernando Valley or in the Ventura County area. He went to USC and he graduated from USC. He grew up in a family, single mother, 3 brothers. He's the oldest. All 3 of them ended up getting a degree, paid for by themselves. They figured out how to do that, and Jason kind of set that example for his other brothers. And Jason eventually decided to go to Dallas, Texas, and open up his operation in Dallas, Texas. Now, Jason's got an operation out of South Florida, out of Tallahassee, Florida. He's got business in Chicago, Indiana. He's got business in Southern California. His business is national, but he is out of Dallas, Texas, and his business in Dallas, Texas, he works with millennials. He has majors, former majors that were in the Army, former lieutenant colonels that were in the Army on his some of his agents working with him. He has former first sergeants in the military that are working with him. He has folks that are boomers that are working with him because Jason found out how to work with millennials and boomers combined together and establish himself a very, very successful business and a good name for himself in a Dallas marketplace because he understood there's a way we can work together with boomers and millennials. This is not the only story. There are many stories of millennials that have figured out a way to work with boomers, and it's become a perfect team. And I believe that's one of the conditions also we have going on today on why the next perfect storm is taking place in the life insurance industry. Even though the average age of an agent is 59 years old, there's a gap where we can connect with millennials, Gen X, Gen Y, working with boomers. Condition number 4, the era of the entrepreneur. This past summer, I decided to do something we've never done before. We decided to buy an RV in 2015. We bought an RV and we wrapped the entire RV with a message of Startup Entrepreneur Tour. It was a PHP branded RV, and myself and 5 others lived in this RV for 30 days. We started from LA, California, and then we went all the way down to Miami, up to New York, to Toronto, back to San Francisco, all the way back down, speaking in 16 different cities. During that tour, roughly 10,000 people got a chance to hear us tell the story of becoming an entrepreneur. And I couldn't believe how many times we went into a city where hundreds of people were gathering around just to say, I want to find out what it is to become an entrepreneur. Now, why is this happening today? And by the way, you can see the video on YouTube. If you just go type on YouTube, Startup Entrepreneur Tour, you'll actually be able to see the video on what the entire experience was like. It was incredible. And so why were so many people so curious about becoming entrepreneurs? Here's why I believe that took place. In the last few years, we saw unemployment go all the way up to 9.3, 9.6, 8.9%. This is between 2009, 2010, 2011. And more people were losing their jobs and asking them this question. This is what the question was. Why am I giving 30 years to a place where I'm either not going to have the opportunity of owning the business, and two, I no longer have a pension plan. Why am I working for a company for 30 years? Why am I doing this? Well, at any point I can get laid off. At any point I can lose my job. Why am I doing this? So entrepreneurship became automatically something that people started saying, what if I can start a part-time business? So historically speaking, every time we've experienced a rise in unemployment, we've also seen a tremendous surge in entrepreneurship. With record-breaking years in unemployment, more Americans started to realize that the only way to have freedom is to become an entrepreneur. Sometimes having our backs against the wall reminds us what we're really capable of. It shows us that we still have a fight in us. For those who were in high school or college athlete, it brings out a side of you that we haven't seen since Hell Week in football or any other sports where you had to fight to get playing time. We are so much more capable than we think we are. I would have never imagined being where I'm currently at in life financially. My family and I skipped a war-stricken Iran to go to Germany, where I lived there as a child between age of 10 and 12 at a refugee camp, and it was a very interesting time living there for a couple of years. You know, when you think about all the immigrants who fight to come to America, they come here for two reasons: control and freedom of their lives. Something we all aspire to have. We want to have the control to raise our kids in a community that we feel comfortable in, to put them in schools that provide the best possible education, as well as a good athletic program. We want the control to take our families on nice vacations every year. We want to have control of our lives to be able to take our family on nice vacations every year, to enjoy those magical moments that we will forever remember. We want the freedom to practice any religion without fear, the freedom to earn as much money as we'd like without being called greedy or selfish, and the freedom to have access to cell phones, internet, newspaper, TV, be able to watch whatever you want to watch. In America, we have those freedoms. And we even have the freedom of our own opinion to say whatever we want to say. We can say things about a president we like or we don't like. These are great freedoms to have, but I would say one of the best freedoms is to become an entrepreneur. This is still a capitalistic environment that we have in America, which allows you and I to start a business part-time or full-time, and based on our effort we put in, we can make as much money as we want to make. Because when you think about the current times, we're facing some challenging times in America today. We often hear opinions on how to fix your financial problems, but the key is to go back and find out how we made this country great in the first place. It's important for us to encourage and challenge one another to go back to what built this country, which was the everyday entrepreneur. We need more people to try and fail in order to have the opportunity to buy and sell. I think sometimes our government is afraid of having people fail. Yet they want to encourage everyone to keep buying things, to grow the economy. And I'm a big believer of free enterprise because that's the only way we can have true freedom. And one of the most tried and true ways of earning the freedom that America offers is to become an entrepreneur. You'll get paid exactly what you're worth. If you earn $1 million, you earned it. And if you earn $30,000, that's what you earn. That's the great thing about the free market. It will pay us based on our efforts and on the competence of the business we're involved in. Your earning potential has nothing to do with your last name, the inheritance you received, how high you can jump, and how tall you are. Instead, it's all reliant on what you put into your work. When I think about this, I think about Rodolfo and Ceci Vargas. Rodolfo and Ceci Vargas came here from El Salvador. Rodolfo was a great swimmer, and in his country, when he lived over there, he was one of the best students in the year he graduated. And the top 5 kids of that year get a chance from the government. They get a scholarship to go to any university around the world. He was one of the smartest kids in his class. So eventually, Rodolfo comes to America, starts working over here. He was an economist in El Salvador. He comes here with his family and starts looking into what job he wants to take, eventually gets involved in the financial industry. And then his wife, Ceci, comes out here to America. Ceci was raised in a family with a father being a doctor and 4 girls, and a doctor in El Salvador roughly makes $7,000 to $20,000 a year. And in that type of an environment, you can't live the life that you want to live. They came over here for the dream. They came to LA first, to Palmdale, California. Palmdale is a city north of LA, 40 miles north of LA. And eventually from there, they moved out to Houston, Texas, and started their insurance agency. And next thing you know, they've built a national business for themselves. These were immigrants who came to America and they became entrepreneurs, educated people who became entrepreneurs, took advantage of the free enterprise system, and have built a very good life for themselves. They live in one of the nicest communities in Houston. They both drive nice cars. They have a very fine taste. They like to travel the world. They've been to Dubai, they've been to, all over the country, all over the world. They've had great times for themselves, but it happened because it's industry, and it happened because they became an entrepreneur, not just an employee. One of the biggest complaints I get from my peers is how tough it is for them to find someone to marry, to find someone to date that's serious, a good husband or a good wife. And do I go on Facebook? Do I find him on eHarmony? Do I go on this? Do I go on Match.com? Where do I find somebody that I can have a serious relationship with? And for me, I can tell you, one of the great things about this industry is I have met many, many people who have met their wives and husbands or husbands in this business. Perfect example is myself. I met my wife in this business here. I can give you an example of a good friend of mine, Jose and Marlene Gaitan. I remember Jose Gaitan, who had gotten involved in the industry. And he used to be a former bill collector, and he got involved in the industry, and we used to go work out together. We'd go to Santa Monica Stairs, and we'd go to LA Fitness to do weights together. And, he was looking for somebody to be in a serious relationship with. And I'll never forget, I remember when one day, while he's in the business, he was introduced another girl whose name at that time was Marlene Del Toro. And Marlene Del Toro was from the mortgage background. And Marlene and Jose started talking to each other, and both of them were serious about life and what they wanted to do. They were both driven, both hungry, both competitive, both good-hearted people. They went to the same church. Everything was good about what these two were doing together. And that relationship went from a business relationship to a dating relationship to then they got married. Now they have a kid and another one on the way. And on top of that, they run their agency together, and they're both making an incredible income for themselves. They've traveled all over the world. They have their dream cars. They're doing all their good things. They run their own offices. They do great things for themselves, but they met each other in the business. The same goes with me. I met my wife, Jennifer, in the business as well. My wife and I met in a company together. She was single. I was single. Eventually, we started dating, and then we got married. Now we have two beautiful children together and one on the way, and this business gave us the opportunity to meet each other. I can only imagine if we were not involved in the industry together, what would have happened, but I'm grateful that the industry offers singles, whether you're Gen X, Millennial, Gen Y, and you are serious about wanting to meet somebody. This industry definitely attracts a lot of strong, serious people who are also wanting to find somebody else that wants to build an incredible life for themselves. This can be that opportunity for you. We can meet that special someone for you. I remember when I once interviewed David Walker, who was a former Comptroller General of the United States of America, which is, in other words, kind of like being the accountant for the country. And he specifically said that one of the main drivers for restoring America will be the day-to-day entrepreneur. It's time for the entrepreneurs of America to get together as leaders and fight to bring back the free enterprise system, thereby restoring hope to American families. Entrepreneurs don't do what they do just to become wealthy. They do it to give back to their local communities. Some of the greatest hospitals, churches, schools of higher learning exist because an entrepreneur decided to use his resources to start a charity. So often we're told to follow the system to the T and it'll produce success. Len and Tasha Cooper did exactly that. Len Cooper was raised by a single mother in Inglewood, California, which was at the time a gang-infested environment. He grew up being constantly told to get a degree in order to live the American dream and have freedom over his own destiny. Taking that advice to a whole different level, he ended up getting his bachelor's degree as well as 2 masters and a PhD from Claremont University in education. He ended up being the youngest principal in all of San Bernardino County. His wife, Tasha, also took schooling very seriously and got her master's degree, which led her to being a school psychologist. Doing their best to raise 2 boys, they finally came to a conclusion that there was a ceiling to the amount of income they could earn if they kept going in the direction they were going. After much consideration, Len decided to become an entrepreneur. He looked at many different businesses until he decided to get involved in the life insurance and the financial services industry. He and his wife now run a successful agency that continues to expand all across Southern California. The industry has given them the opportunity to travel all over the world while taking their 12 and 14-year-old sons with them. The industry has given them the opportunity to travel all over the world while taking their 16 and 18-year-old sons with them. And now their 18-year-old son got accepted to one of the best universities in America that they're proud to celebrating with due to them being able to fund it. He's now looking at this industry as a vehicle to allow him to really make a major positive impact in the world of education. I haven't met one person yet who wouldn't mind being financially independent. Yet some of our choices are not congruent with our desires. For instance, think about the wealthiest person you know. I'm not talking about Warren Buffett or Bill Gates, but someone you know, meaning somebody you've touched, somebody you've had dinner with, a family member, a friend. Now here's a kicker that tells us what we need to do in order to have the opportunity to become wealthy. Is the person you're thinking about, who's the wealthiest person you know, an employee or an entrepreneur? Chances are your answer was an entrepreneur. I think about Tom Ellsworth. Tom Ellsworth is a good friend of mine. I've known from the church for quite some time now. Tom graduated Cal State University in Northridge, and then from there, he ends up working at Sprint, becomes an executive with Sprint. He comes out with the first unlimited text, unlimited call package, which back in the days, if you remember that package he came out with, and did very, very well. Eventually left Sprint and went and worked with his friend because he wanted to become an entrepreneur. And they started a company called Jamdad. If you remember Jamdad Bowling back in the days, they started Jamdad. He was one of the first equity owners of the company because he was an entrepreneur being there early at the stages of the company. They eventually sold Jamdad to EA Sports for $680 million. And that's how he made a portion of his wealth. Then he left and became a CEO of GoTV, and he started a company called Premier Digital Publishing. And now he is the president of PHP Agency in the life insurance industry, in the financial industry, coming from a complete different background of technology, seeing the fact that he can take the same things he learned in technology and put it in the space of insurance and financial industry on how he can use that to speed up certain processes. That's now got them in a position to be able to make his wealth in the life insurance and the financial industry. I say this to you because it doesn't matter where you are. It doesn't matter whether you're an executive. It doesn't matter where you're working at yourself. If you want to figure out a way to create wealth for yourself, becoming an entrepreneur puts you in the best possible position for you to create wealth for yourself. Condition number 5, the need for life insurance. There was a period in 2002, 2003 when my friends and I used to go to El Torito restaurant near our office at least 3 times a week. The manager working there was named Jacopo. Jacopo had a wife and 3 kids. At the time, he was 39 years old and perfectly healthy. You couldn't assume by looking at him that he had any health issues. His wife was raising the kids at home while he was working. The challenge with his wife was that she didn't speak any English, which meant that Jacopo was earning the only income they were depending on. One day, one of my agents talked to him about the importance of life insurance. They set up a time to get together at Jacopo's house and possibly putting a life insurance policy together for him. And then at the end of the appointment, Jacopo has a certain look on his face. It's almost a smirk on his face about wanting to buy a life insurance policy. And he says, why don't you buy yourself a life insurance policy? And Jacopo said, look, I know what you're trying to do. I know what you're trying to say. I don't need a life insurance policy right now. I'm 39, I'm healthy, there's no reason for me to pay $50 a month for a $500,000 life insurance policy. And at that time, it was a small policy he was getting. A week went by before we went back to the restaurant. And while we were there, we asked our waiter about Jacopo. The waiter had the most disturbing look on his face when he asked the question and told us that Jacopo had a heart attack the night before in his sleep and never woke up. He died at the age of 39, leaving behind very little savings and no life insurance policy for his wife and 3 kids. I will never forget how my stomach felt when I first heard the news. There was a sense of failure as well as concern for the family and the feeling that we could have tried a little bit harder to convince them of the importance of life insurance. However, we all knew that the agent did all that he could do. This was one of our better agents that we had. But from that moment on, I adopted a totally different perspective on what it meant to be a life insurance agent. I was reminded of just how important and honorable it was to serve and protect as many families as possible. It no longer was a job or a career or about making money. Ever since that day, I woke up every morning knowing that there's a bigger purpose to my career than just a paycheck. You see, you can sell a house and give the keys and somebody can go into a house. It's great. You can sell a stock and someone can be excited about it. But I don't know a feeling of when a client calls knowing that they have nothing in place, yet at one point they put an insurance policy together and you're able to deliver that $300,000 policy, that $500,000 policy. There's nothing we can do to replace the human being, the love, the father, the husband, the brother, the sister, the mom. We can do nothing about that. But the burden that comes with the money, we give them the opportunity to mourn while they're going through the loss of a loved one. There's an organization out there called Life Insurance Foundation for Education, and they have done an excellent job of educating as well as creating awareness for life insurance needs. One of the most recent interviews they did was with Lamar Odom, the former Los Angeles Laker, who was a national spokesperson for Life Insurance Awareness Month back in 2011. In the interview, he shares a story of how life insurance was one of the main reasons why he was able to make it to the NBA. His quest to the NBA began in a single-parent household in Queens, New York. His mother, Kathy, earned a decent income working as a corrections officer, and with that income, she sent him to Catholic school because of concerns about the public schools in a rough neighborhood. Unfortunately, she didn't live to see Lamar succeed as an athlete. Kathy died of colon cancer when he was only 12 years old. Lamar's mother never expected to die at a young age, but thankfully, she did not leave her son's future to chance. Because she had life insurance, Lamar was able to continue his private school education. When he graduated high school at 18, life insurance again impacted his life when he was already considered one of the best young basketball players in the country. Because he was financially stable as a result of his mother's life insurance proceeds, he had the chance to attend college for several years. Too many Americans haven't done the kind of planning that my mom did, says Lamar. They don't have life insurance because they don't think they'll ever need it. I'm sure my mom didn't think that she'd die at 35, but that didn't stop her from doing the responsible thing. Think about how many childhood athletes with a chance to go to the next level weren't able to do so due to death in the family that caused them to start working early and sacrifice their dreams. How many young kids with aspirations of becoming a doctor one day who, because of a loss of a breadwinner without life insurance policy, are forced to drop out of college and get jobs to support their family? This is one of many reasons why a life insurance agent's work is honorable. You may not get the glory at the sale or even the near future, but when the day comes that the life insurance policy needs to be put to use, you will forever be remembered by the ever so grateful family members. Life insurance is probably one of the simplest products to learn about. You have two choices when buying a life insurance policy. You can buy term policy or you can buy permanent policy. The easiest way to explain the two is to look at the term as renting a house and look at the permanent policy as owning a house. If you can't afford to buy a house, you rent one. The advantage of renting a house is the fact that you can move at any time and it's cheaper than buying. But the disadvantage is that renting doesn't build any equity. The same goes for a term policy. A term policy is cheap, but it doesn't build equity. On the other hand, a permanent policy is like owning a house. The mortgage payment may be a bit higher than renting. However, over the long haul, you end up building equity. That's how a permanent policy works. You pay a bit higher than a term policy, but it builds equity and lasts until the age 100 to 120. Both term and permanent policies have a place where they're effective. Many people will argue with each other and tell you that the only way to go is buy term and that's the difference, while the other agents will say buying permanent policy is the best way to go. I'm here to tell you that one size doesn't fit all. I would encourage you to find out for yourself which one makes the most sense for you. This is another reason why I'm an advocate of encouraging people to get involved in the financial industry to learn for themselves the secrets of money. When you look at some of the statistics today, you realize how much of a need there is for more life insurance agents. The Life Insurance and Market Research Association released its research findings in September of 2011, showcasing a few facts about life insurance. Some of these numbers are staggering. Think about this. The proportion of U.S. adults with life insurance protection has declined to an all-time low of 41%, which means that a total of 95 million U.S. adults today have no life insurance at all. 1 in 10 insured adult owns both a permanent and a term policy. That's half as many as 2004. Young males ages 18 to 24 are less likely than in the past decades to be starting their own adult years with any life insurance policy. Only 13% had individual life policies in 2010 compared to 30% in 1998. And I will tell you, one of the reasons why that's the case is because back in the days, in the 70s and 80s, when people bought insurance policies, we used to do something. It was called door knocking. Somebody would come knock on your door. You'd open the door. It was an agent. After 2, 3, 4, 5 times of knocking on your door, you finally let the agent in. You eventually bought a policy from them. You were protected. Why? Because unlike shoes, unlike clothes, unlike a phone, unlike cars, life insurance policies are not bought. They're sold. Somebody needs to come to you and sit down and show you how much policy you need for you to buy it. You don't see a lot of people buying policies. You see a lot of people selling policies. That's the thing that's been missing for the last 20, 30 years. There's nobody knocking on doors. And that's going to affect millennials, Gen X's, and Gen Y's the most. Why? Because they're not going to have somebody knocking on their doors. If somebody doesn't go sit with them, the likelihood of them owning a policy is slim compared to what it used to be 20, 30 years ago. So although these numbers are simple statistics that we're looking at, I want you to think about how life insurance affects the economy. Although these are simply statistics that we're looking at, I want you to think about how life insurance affects the economy. Think about how many families would be relying on the government after a loss if the breadwinner hadn't taken the time to purchase a life insurance policy. The surviving spouse would have to replace the income somehow, and normally that happens through government assistance, money which, by the way, is generated by collecting taxes, which means you and I are paying for someone who either didn't see value in purchasing a life insurance policy or didn't have the opportunity of an agent presenting them with the different options of life insurance. What's most conditioned in today's society is that we've been conditioned to think that there's more value in insuring our cell phones, cars, jewelry, artwork, home, and many other things, yet it's not a big deal to put off insuring our own lives. Something that our own family is counting on far more than a cell phone. Think about how much safer you and I feel driving on the streets ever since auto insurance became mandatory. Have you ever gotten into a car accident where the other driver was at fault and yet wasn't insured? Who had to pay for the damage? How did you feel about it? What happened to the cost of your auto insurance? And although it wasn't your fault, your auto insurance costs went up. And the auto insurance is necessary. Which is more important when it comes down to it? Your car or your life? Some will say that life insurance is expensive, but the truth of the matter is that life insurance has never been cheaper than it is today. This is because life insurance is all about life expectancy, and we're living much longer today than we ever have before. This in turn means almost anyone can afford life insurance. What's needed are agents who can create that awareness for families and help them see the consequences of what can happen if they're not protected. Basic math tells us that if more families are protected with life insurance, there will be less chances of another tax consequences for the hardworking American families who are doing their part. Life insurance creates an independent atmosphere rather than a dependent one. All of these statistics are happening during a time where the total number of life insurance agents has decreased from 500,000 to 174,000. A breakdown like this, in which the need for life insurance is increasing while the number of agents is decreasing, creates an explosive opportunity in the industry. This isn't a myth. All the numbers in this book reflect factual events that are taking place right now. Nothing is hypothetical. This is reality. Economics 101 teaches supply and demand, and there's a major demand for life insurance agents to help protect as many families as possible. But we currently have a very limited supply of life insurance agents. The life insurance industry is experiencing the beginning stages of a boom as the demand is answered. The boom is causing many agents to relocate to new growing markets. I think about Chad Terpstra, Kahindi Thomas, and Jonathan Mason. Let me tell you why I think about the three here. See, Chad Terpstra was originally from Iowa. He grew up in Des Moines, Iowa, and New Sharon, Iowa. It's a small town population, roughly 1,000, 2,000 people. He moves from Iowa to California, Chad does. And then from there in California, he gets involved in the financial industry, in the insurance industry, starts growing. Eventually, Chad goes to Florida to open up an office in Fort Lauderdale with Jonathan Mason and Kahindi Thomas. Now, Jonathan Mason's background, he comes from the bar mitzvah. He used to be a entertainer. If you search his name, you'll see this. He was an absolute entertainer. He's the guy that goes, put your hands up in the air, put your hands up. And he's one of those guys. If you've ever been to a bar mitzvah, that's exactly John Mason. John Mason goes to Jacksonville University and he gets a full ride scholarship to play soccer. He goes and tries out at Manchester United, gets injured, comes back, and he starts becoming an entertainer for bar mitzvahs. Well, John Mason decides to partner with Chad Terpstra. Then comes Kahindi Thomas. Kahindi Thomas comes from the financial industry, the traditional part of financial industry, where he was in it for 17 years, decides to partner up with these guys to open up an office in Fort Lauderdale. Well, their office does so well together that they decide to expand. Chad Terpstra moves and expands his own agency in Atlanta, Georgia. John Mason goes to Jacksonville, Florida, and Kahindi Thomas goes to Plantation, Florida. And they're all now growing their businesses nationally. But this happened because they decided not just to become producers, although they were selling policies themselves as well. They decided to go out there and protect as many families as possible and recruit agents and teach them how to do it. That's one of the reasons why their business grew the way it did, because they focused heavily on recruiting agents and training them on how to go protect families. And look what happened to their business now. But a big part of that is because there's a tremendous amount of demand for agents all across the country. See, the life insurance business is attracting people from all walks of life. Initially, I thought the most successful people in the industry would be those who had prior experience in sales, but my assumption couldn't have been further from the truth. I've had the honor of working with thousands of agents over the last 10 years in the financial services industry, primarily in the life insurance business with no prior sales experience. The majority of the agents whom I've seen do extremely well came from a career that attracted individuals who enjoyed serving and helping people. It becomes a very natural fit for them to transition from what they're doing into life insurance. Top 10 honorable professions. An honorable profession is something worth investing your life into. There's honor in any job that someone does well with enthusiasm, but there are some professions that simply deserve our honor and respect. As human beings, we all seek to be part of something bigger than ourselves. Hollywood has made billions of dollars by creating fictional characters such as Hulk, Superman, Spider-Man, many others to connect with audiences who value the fantasy of the good guy saving the world. Enjoyable as these characters are, it is important that we emphasize who the real superheroes of America really are. Heroic professions are ones that individuals choose because of their desire to serve and protect others. Some of the professions on the following list may be ones that you don't think of as particularly honorable until the day that person is helping you. Some of these careers simply don't get the credit they deserve despite the fact that they are full of real-life heroes. They may not be the highest paid or most recognized, but the world wouldn't be the same without them. Here are the top 10. 1. In no specific order. Military personnel. One of many things that I liked about serving in the U.S. Army was waking up every morning with the knowledge that what I did was honorable. It was a certain feeling that words can't describe, something you have to experience to fully understand. The sense of pride that came from just walking through the small or local community in my uniform was priceless. There was great worth in knowing that the greatest nation on earth was counting on me to protect it. Civilians might not think about military personnel on a daily basis as they go to work, but when a crisis like 9/11 takes place, they're glad the men and women of the armed forces are here to put their lives on the line if they need be. In many cases, soldiers spend months, if not years, away from their loved ones. While some may complain about missing a favorite TV show or a big game that's taking place, there are soldiers missing the birth of their newborn or the moment their toddler takes the first step. These are just some of the sacrifices our armed forces makes for a larger cause. Some make the ultimate sacrifice for a greater cause than their own lives, the cause of liberty, humanity, or the defeat of evil. When I started at the 101st Airborne Division in September of 1997, we got word that a movie was coming out that featured our unit. The entire base went on a rotation of watching this movie in a theater on base that could fit around 800 soldiers. The movie was Saving Private Ryan. I'm sure you remember that movie. Just imagine how electrifying it was in the theater at the end when Captain John Miller, played by Tom Hanks, spoke his dying words to Private James Francis Ryan, which was played by Matt Damon. Earn this. Earn it. Every single one of us in that theater had eyes filled with tears of honor and hearts filled with the desire to earn it. Whether you've been in the military or not, that was a powerful moment because ultimately we all want to earn it. There's not one person in the world who doesn't want to make a positive impact. We all want to leave a legacy behind in which our grandchildren remember the impact we made. Former military personnel do extremely well in the life insurance business because their natural instinct to protect individuals. Their work ethic also serves them well in business. Honorable profession number 2, teachers. Most of us know that teachers are not the highest paid professionals out there, but their job is rewarding in other ways. If you think about some of the people who influenced you the most in life, odds are you would remember a teacher or two. It could have been 20 or 30 years ago, but you probably still remember the teacher who inspired you, believed in you, or challenged you. At Glendale High School, I had a teacher named Miss Sinclair who made a big impact in my life. She was a little shy of 5 feet tall and weighed maybe 110 pounds, but she walked around as if she were 10 feet tall. She commanded the entire class with her words. She believed in her students and encouraged us, but at the same time, she pushed us to be better and to reach higher. She was a major in the U.S. Army Reserve and a big part of the reason that I eventually joined the Army. Later in life, when I was invited back to high school as a keynote speaker, I spent the first 15 minutes of my hour telling the students about Miss Sinclair and the enormous influence she had on my life. I still see her as an angel that God put in my life. The life insurance business is simply about teaching basics of financial concepts to individual families, which makes it very simple, successful fit for teachers. Many teachers sell life insurance as part-time careers to supplement their full-time income during the 3 months they get off each year. Honorable profession number 3, police officers. When we see a cop in our rear view mirror, we typically don't get a warm, fuzzy feeling of appreciation for this profession. In fact, we can get pretty argumentative and rude toward the police. That is until someone breaks into our house or our office. And they're there at 5 o'clock in the morning to make sure everyone is okay. How often do we hear stories about a police officer getting shot or injured on the job? That's someone's husband, daughter, or brother who just took a bullet for the community. Most police officers have a strong desire to see justice and protect the innocent. Sure, you can see the occasional example of a cop who abuses his or her powers, but let's focus on the thousands who do their job with honor and the desire to serve and protect. It is very common for police officers to have a career outside a full-time job of law enforcement. They're typically involved in security work or sales. Life insurance is an example fit for them, especially since their motto is about protecting and serving. Honorable profession number 4, firefighters. Unlike police officers, firefighters actually get quite a bit of respect and recognition for what they do. September 11 was a vivid reminder for all of us that firefighters run toward danger when any sane person would run away. I live in Southern California and the wildfires here can get pretty ferocious. Thousands here know that they owe their homes, possessions, and sometimes their own lives to the brave men and women who stand between the flames and their world. Firefighters don't do it for the money or glory, they do it because they are driven to save the lives and livelihoods of others. Firefighters are successful in the life insurance business for many of the same reasons as police officers are. Honorable profession number 5, nurses. Other than the birth of a newborn baby, we rarely go to the hospital for a happy reason. I'd never been much of a fan of hospitals until my father had a major heart attack that caused him to stay in a hospital for a month at UCLA Medical Center. That experience influenced me to have a different level of appreciation for what nurses do. They're living angels to many families and patients who count on them while they recover. Nurses see people at their most difficult, painful, and stressful moments. Sick and hurting people look to their nurse to comfort them, listen to them, and take care of them. Nurses work long and demanding hours, sometimes dealing with the tragedy and unavoidable death. Their reward is found in the moments in which they see a patient get well and go home, in no small part because of their tireless and dedicated efforts. We may not always like a nurse poking us with a needle, but many of us will have days in our lives when a nurse will be the one getting us to healthier times. Nurses have a gift of patience when it comes to dealing with people, which helps them showing families the different options they have in getting their finances in order. The compassion and dedication of nurses help them succeed in the industry. Honorable profession number 6, parents. It's a difficult task today to be a parent. There are more things to guard your kids from than there were 20 years ago. The internet has become an amazing educational tool as well as a dangerous playground for kids. Moreover, we live in a culture today where kids are not taught to respect their parents, and parents are in turn afraid to discipline their children. But many parents aren't afraid to give the love, guidance, and discipline children and teenagers need. Moms and dads are responsible for raising the next generation of leaders and thinkers. Being a parent is perhaps the more underappreciated job because it is often not recognized as a job. As a society, we need to keep the standard of parenting high, and that starts by recognizing that being a parent is the most important job we will ever do. For every bad parent, there are hundreds that are day-to-day heroes. Tell them what a great job they're doing, whether they are your parents or parents you know in your community. It's very easy for a parent to sit down with other parents and show them the importance of life insurance and the role it plays in the future of their loved ones. Honorable profession number 7, doctors. With the current controversial healthy paid, many doctors have been criticized for making too much money or charging too much for their services. But if you're willing to be in school for 12 years and spend hundreds of thousands of dollars for education, you've earned the right to get compensated for it. Even though medicine is a very well compensated profession, most doctors do not get into it for the money. Most doctors that have made wanted to be doctors since they were little. They have a powerful drive to help people save lives and make a difference. Most full-time doctors whom I've seen get involved in the financial industry did so originally out of a desire to get their own finances in order. Getting involved in the industry allows them to learn as much as they can about how money works. Some of them end up making a career out of it. Honorable profession number 8, clergy. Talk about a full-time job when you're the head of a church. You work 24/7. Pastors and priests never truly have time off because they're always responsible for their congregation. The pastor must console and pray for the wife whose husband just left her and their 3 children, or for the church member who just lost his home and has nowhere to live. When the church is short of funds for charitable work, it is the pastor who must deliver the unpopular message to the congregation on the importance of tithing. Whether you belong to a small congregation or a large one, let your clergy know how much you appreciate them. Believe it or not, you could be the first person to do so. More and more churches are starting to see the importance of not shying away from teaching their congregation about how money works. Many of them are starting to set up workshops and encourage families to attend and learn the basics of money. Becoming a life insurance agent on the side is a natural fit for members of the clergy. Honorable profession number 9, engineers. Whether you're driving across the river on a bridge, using any kind of electronic equipment, downloading software to your computer, or flying to another continent, you owe thanks to groups of engineers who spend countless hours developing and advancing many technologies. Engineers have made things easier, faster, cleaner, simpler, and cheaper for us to use. I had the opportunity to interview the legendary engineer Steve Wozniak, the co-founder of Apple, recently. It was great to speak with this living legend who has impacted the world around him. Imagine what the world would look like without an engineer like Steve Wozniak, as well as without Apple. That's engineers that we're talking about. Engineers want to know every detail about a project, which sometimes slows down the learning curve when they get involved in a new industry. But here's the good news about that. Once they learn a concept and believe in it, their conviction makes them want to teach it to everyone else. Over the years, I've seen many engineers build massive agencies in the life insurance business. Honorable profession number 10, life insurance agent. The inclusion of this group may be a surprise to many of you because we often don't think of a life insurance agent as a hero. When I left the military, I had a chance to make a career choice. A mentor suggested life insurance. He was an ex-Navy SEAL who had done very well building several companies for himself, so I valued his guidance. He He told me that working in the life insurance was one of the most rewarding jobs I could choose. I didn't understand what he meant by it until I started working in the field. The stories of many whose life insurance policies provided financial stability during a time of sorrow eventually showed me the honor in helping others to be prepared for the inevitable. After I gave a talk to a few hundred people on the topic of honorable professions, a lady approached me with tears in her eyes and told me she agreed that being a soldier and life insurance agent were both honorable and important. She then told me the story of her son, a soldier who had been killed in battle in Iraq. Her son had always wanted to be a soldier. Knowing that it was dangerous, before he died, her son had secretly purchased an additional life insurance policy for his family on top of what the military provides. This mom, who had lost so much, carried with her the pride in both her son's sacrifice for his country and in his effort to ensure that his family would be assisted in the event of his death. How to get involved in the life insurance industry. The word is starting to spread about the boom that's taking place in the life insurance industry, which is attractive to a variety of people. People are getting involved in the life insurance business for many reasons, and whatever their reasons may be, the business is flexible enough to suit the varied needs of each interested individual. Here are 4 reasons why agents get involved in the insurance business part-time. Number 1, the opportunity to learn how money works. One of the reasons why I initially got involved in the financial industry was to simply learn the secrets of money. I think about the hundreds of thousands of people in America who are in the midst of challenging times financially because of the simple lack of fiscal education. Imagine if you were a construction worker building pools on a daily basis. What would you get very good at? Building pools. What if one day you and your family decided to build a pool in your own backyard? Who would build it for you? You would, since that's what you do on a daily basis. What if you were a hairstylist and your son needed a haircut? Who would you trust to cut his hair? Probably yourself. How about if you were in the financial industry where every day you educated others on how money works? Who would manage your own finances for you? You would. Ask yourself this. Would you ever take advantage of yourself financially? No, of course not, because that would be foolish. The point I'm making here to you is that the only way you'll fully feel comfortable about your own finances is by getting involved and learning on how money works. Number 2, the chance to earn part-time second income. We're living at a time in which most people's primary income is not keeping up with inflation. I meet a lot of people who earn a 6-figure income who realize it no longer means what it used to in the 80s. Today, earning a low 6-figure income really means you're only taking home somewhere around $5,000 to $6,000 a month, depending on the state and tax bracket you're in. The cost of college education is rising rapidly, which is a concern for parents who have children getting ready to enter college. How will these parents afford to fund their children's education as well as their own retirement? There are typically 2 different kinds of part-time agents in the industry. There are those who are part-time with no plans of ever going full-time because they love their full-time jobs. Some of them are in the military, others are police officers, teachers, nurses, or coaches, but they don't want to give their main career up, which they don't have to though unless if they want to go full-time in the insurance industry. The second kind of part-time agents are those who are not happy with their full-time jobs but can't stop working because they need the income from their first job. But here's the good news. By getting involved in the life insurance business part-time, they can build up their book of business and eventually go full-time and quit their job they don't like. In the case of either part-time agent, the life insurance business provides both job satisfaction and the flexibility to provide financially for your family. I think about Fred and Christy Terrace, who were both working at a restaurant, Fred as a bartender, Christy as a waitress, and neither one of them wanted to stay in that business for a long time because the hours that there is in the service business. They wanted to build a family, they wanted to have kids, they wanted to continue doing other things. So Fred and Christy, both of them got involved in the financial industry, in the life insurance industry, on a part-time basis. They got their licenses part-time. They made 6 figures part-time while still working at the restaurant and eventually left their job and ran their life insurance agency now by themselves together. They now have a child and they're now running their own business out of Southern California, doing the business full-time. Number 3, a way to gain a competitive edge. The life insurance business is starting to attract a higher number of professionals such as attorneys, CPAs, who are discovering the importance of having an edge in their business, and that edge is offering insurance to their clients as well as their usual services. Many of these professionals are also starting to see the bigger picture of recruiting and building an agency. I once spoke to a group of 300 professional CPAs in Denver who were all getting their insurance licenses to provide an additional service to their clients. There were several CPAs in the room who were earning in the range of $250,000 and up just from the additional financial and insurance side of their business. This doesn't mean everyone will earn this kind of income, but the opportunity certainly exists for such professionals. Point number 4, a path to escape boredom and rediscover life's excitement. Norman Vincent Peale once said, "The more you lose yourself in something bigger than yourself, the more energy you will have. When I speak to people across the country, I often hear people talk about how much they dislike their jobs. The fact that their jobs become boring and there isn't really a bigger purpose to it. Too often people don't realize their capacity unless they put themselves in a position to see what they're fully capable of. It'll always be a mystery to them what they could have done with their lives. At some point, we all realize that deep down inside, we want to be counted on. I'm a firm believer in the fact that we were created to serve and be dependent on. We do better when we're put in situations that require us to step up. And moreover, we feel a certain void when no one relies on us. We start questioning our own truth. We start questioning our own worth. The insurance industry reaffirms your personal value and gives you a sense of pride in what you do because your professional involvement, a family you've helped, could have been left behind not knowing how money works. This business is extremely rewarding and offers a certain sense of satisfaction that words cannot describe. There are several factors to look for when deciding to get involved in a life insurance business. The key is to know your choices and what you're looking to do personally. There are 3 ways in which you can get involved in the life insurance industry. Part-time agents supplementing your full-time job, a full-time producing selling life insurance and annuities, a full-time broker building your own agency. All 3 are excellent choices. Yours should be determined by what fits your life best. 8 points on how to start your career in the life insurance industry. 1. Choose a company that allows you to build your own agency within an agency. I've covered many different points in this book, but the key point is that the biggest opportunity in the life insurance industry currently exists for those who decide to build their own agency. The timing couldn't be better to recruit and develop new agents, which provides the opportunity to earn an override as a broker. This allows you to earn income for the time you put into training the new agent. This not only gives you the highest potential for income, but it is also a stable long-term business that you can count on to provide you freedom as a business owner. Number 2, seek out opportunity for equity. One of the first clients I decided to go meet with when I was starting to first work with Morgan Stanley Deanwood was a gentleman named Aaron who owned a Windows company. He was a self-made millionaire who came to New York from Russia and had done extremely well in business. Since my good friend at the time was his assistant, she was able to set up a time for us to have an official business meeting. I gave him my business card and told him I had begun my career as an advisor and was interested in earning his business. He immediately asked me if I ever intended to be wealthy. I answered certainly yes. He immediately asked me if I ever plan on being wealthy. I answered yes. And that's when he started explaining to me the concept of creating wealth in a way that nobody had explained to me before. He encouraged me to never work for a sexy established company. When I asked him why not, he simply said that an established company that's been around for 20, 30, 40 years had a group of people who helped establish the company, and in the process, they were given the opportunity to own a piece of the company. With the company established, those original founders are now wealthy. But at this point, I would just be an employee working for that firm. He challenged me to make the tough decision to go to a newer firm and help them become established, which would earn me the opportunity of one day owning a piece of that company and truly experiencing wealth. This is why I highly suggest that you go to a company where you not only have the chance to own your own book of business, but also eventually a piece of the life insurance agency itself. The key is that you're going to work hard building your business anyway, so why not put yourself in a position to maximize the return for your time? Number 3, look for companies that millennials are involved in. Having millennials involved in a company's leadership ensures you that there is someone constantly doing what needs to be done to adapt to current times. We're living at a time when things are changing every single day. I was in line to buy an iPhone 6 Plus when a lady in front of me turned around and said, "I could always order the phone online and it would arrive in 4 weeks on your doorstep." I told her that I couldn't wait that long because by then the iPhone 7 would be coming out. I'm sure you understand my humor here, but the point is that things are changing very quickly. You want to make sure that there are people involved in the company at the top who will stop at nothing in their quest for success. Millennials, with their desire to do the impossible and change the world, provide an enormous boost to a company when in leadership positions. Point number 4, look for multiple provider carriers. The internet has made a variety of information available to consumers, which means it has become difficult to sell expensive term life insurance. It was easier in the 80s during the phase of buy term invest the difference, but today is a different era. Clients are purchasing a term policy, then immediately afterwards they are going online and realizing that there's a policy out there 40% cheaper than what they paid. This has caused more agents to see the value of offering multiple carriers, which allows them to compare policies based on the client's needs. It is not necessary to offer every single carrier, but I recommend having somewhere around 3 to 5 carriers that help your clients in the decision-making process. Number 5, Find a training program that offers you a personal mentor. The great thing about the life insurance industry is that most companies offer initial training, but the challenge is that you are eventually left alone to figure out the intricacies to the field all by yourself. The best systems are those that offer a mentor for you to get started with, someone you can call on for answers to questions you don't have. One of the key benefits of having a good personal mentor is that the majority of them are all big believers in personal development. The insurance business has a track record of attracting and developing strong leaders who in turn develop others. Number 6, don't overlook incentive trips. If you choose the right opportunity, chances are you will have the added luxury of traveling all over the world. There are a lot of nice places in the world to visit, and I highly encourage you to do whatever you can to qualify for every trip. It's nice to travel the world, but it's even nicer when the company pays for it. I can think about for myself, I've been to Croatia, Santorini, Athens, Macedonia, Venice, Italy, Guatemala, Jalisco, Narrated, Puerto Vallarta, Kona, Kauai, Maui, St. Martin, Caribbean, Bahamas, Cayman Island, Portugal, Spain, NASCAR races, Disney World, Kentucky Derby, Super Bowl, Pebble Beach. I can go on and on. That's all in my 20s. I've gone to BCS Bowl. I've gone to Dubai, Tuscany, Paris, every single Caribbean island you can think about, Aspen. I mean, the list is a long list. All because of this industry. Many times I talk to people who go to school, traditional school, and they're getting their MBAs or bachelors with the plans of traveling in their 40s and 50s and 60s. But why not start traveling today? Well, the great thing about the financial industry is if you know how to produce well, if you know how to produce strong leaders, you will go see the world with many of the top leaders in the life insurance industry. Point number 7, find a strategic compensation plan. I often have people tell me what a high percentage they make on their policies they write. I often have people tell me that some agency somewhere is willing to give them a very big contract if they go work with them. And in many cases, the questions I ask when they do go there a year, 2 years, 3 years later is, how did it work out for you? Well, I ended up getting a 90% contract. I ended up getting an 80% contract, whatever the number is. But how did it work out for you? Because 90% of zero is still zero. You see, a strategic compensation plan is to have leaders and other people that are willing to work with you to help you develop your business. The key to a strong compensation plan to reach the $300,000, $400,000, $500,000 type of income, and even possibly a multi-7-figure year income, will be one that allows you to become a broker and develop other brokers in which you get rewarded for the override you get for the leaders you develop. That's what I call a strategic compensation plan. Point number 8, run with a fun and innovative group of people. After being in the workforce for a while, you start realizing you're probably going to spend more time with the people you work with than your own family. You may as well have fun with the people you work with. Dale Carnegie once said, people rarely succeed unless they're having fun in what they do. I highly suggest you get involved with a company that's big on having fun. As you're finishing up this book, the good news is that the boom has just begun. My hope is for you to take the initiative to do your own due diligence on finding an insurance company that's a good fit for you. There are many great leaders in the insurance business who are willing to take you under their wings and teach you the business as long as you're serious and committed to learning. It could possibly be one of the best business decisions you ever make in your life. This book has not only been about the life insurance business, it's also been about finding leaders who have the courage to at least give the industry a try. If you choose this industry, at the very least, you will learn about different financial concepts and knowledge that will serve you throughout your life. Alternatively, the best thing that could happen is that you find an industry that allows you to build the kind of a life you've always dreamt of building. I'm also here to tell you that the first 2 years are going to be very annoying at times, just like in any other business you get involved in. But if you're tough, strong, kind, caring, willing to work hard, and you're dedicated, there's no limit to how big of a business you can build for yourself. You could end up being the next big success story being talked about in the industry. The conditions discussed in this book can help you capitalize on the perfect storm that is currently taking place. If you're someone who is serious about building an agency within the industry, I highly suggest you share this message with the people you know who would also have the desire to participate in this movement. Meanwhile, I invite you to stay in contact with me through my social media channels. You can find me on Facebook, you can find me on Twitter, you can find me on Instagram, as well as YouTube, by my name, Patrick Bet David. Thanks for listening.